Good afternoon, everyone. Welcome to the New York City Housing Authority's July 15, 2026 Audit and Finance Committee meeting. Today is Wednesday, July 15, 2026. The time is now 2:06 p.m. We welcome the committee members and others to the meeting, including NYCHA external auditors, Deloitte & Touche, and internal audit representatives from RSM US LLP, all of whom we'll be hearing from during this afternoon's meeting. My name is Ben Brando, Senior Director of Internal Audit and Assessment. As always, it's a privilege to be with everyone today, and thank you to those of you unable to join in person this afternoon who are with us online via live stream. A few usual administrative items before we begin. As I mentioned a few moments ago, please just a reminder to kindly place all mobile electronic devices in silent mode. Secondly, if you're a presenter, as usual, please use a provided microphone before speaking. Please tap the microphone to ensure the green light is on so that all who are in attendance and those watching online can hear you clearly. When not speaking, please make sure the microphone light is red, which indicates that the microphone is muted. And as noted a moment ago, this meeting is being live streamed, and as such, it's imperative that all speakers please speak audibly so everyone can hear your contributions to the meeting. Now, for the record, we will have the roll call conducted by Internal Audit and Assessment Assistant Director Anil Agrawal. Anil, please proceed.
Thank you, Ben. Good afternoon, everyone. So, from the Audit and Finance Committee, we have Mr. Victor Gonzalez.
Present.
Mr. Mark Kaplan.
Present.
Ms. John Talley.
Present.
And from NYCHA team, from Internal Audit, Benjamin Brando.
Present.
Myself, Anil Agrawal. Present. To my right, we have Georgiana Okoroji from Finance, who is the Senior Vice President for Financial Planning and Analysis.
Present.
Then we have Amita Patel from General Ledger, Director.
Present.
Ayat Lee, Controller.
Present.
From Deloitte & Touche team, we have the partner Alan Trutzwer.
Present.
Managers Senior Lim, Tony Lim.
Present.
From RSM,
We have Elvin as well.
we also have Alvin Pearson, the Senior Auditor from Deloitte.
She said present.
Present.
Yeah.
She said present.
Okay, thank you. From RSM, we have Jennifer Murtha, partner.
Present.
And Megan Brower, manager.
Present.
Okay, that's all from the presentation table as well as the committee. And in terms of the Audit and Finance Committee, we have a quorum, so we can start the meeting. Thank you.
Thank you very much, Anil. Mr. Chairman and committee members, we have a particularly comprehensive meeting agenda this afternoon, so kindly please be mindful that we do have a good deal of material to cover in this session. The first item on the agenda for the afternoon is the approval of the draft minutes of our Audit and Finance Committee meeting held April 9th, 2026. Do we have a motion to approve those minutes?
So moved.
Thank you, Vice Chair. Second, all in favor?
Aye.
None opposed? And no abstentions? Great, thank you. That has been carried. Thank you all. Our next agenda item is a presentation of the draft annual comprehensive financial report for 2025, consolidated financials as well as LLC 1, and briefly on the NYC Public Housing Preservation Trust. So I will turn it over to Ayat and finance team to present that, please.
Good afternoon. We are here to present and provide a financial update on the New York City Housing Authority for the fiscal year ended December 2025. Today, we will walk through the key changes in our gas fee pronouncement, rent collection trend, net remediation obligation, and NYCHA overall finance performance. I also want to notice at the very beginning that the draft report we've had an anticipated unmodified opinion from the Deloitte LLP, subject to final completion and signature. An unmodified opinion means that the financial statement presents fairly in all material respects. The financial position, change in financial position, and cash flow of the authority in accordance with GAAP. Let me begin with the accounting standard implemented in 2025. This year, there were 3 recent adopted GASB statements to highlight: GASB 102, GASB 103, and GASB 104. First, GASB statement 102 address certain risk disclosure. The standard requires government to evaluate whether concentration or constraint could create a risk of a substantial impact on the government. Concentration could be or diversity in significant revenue source or cost area. A constraint could be a limitation imposed externally or by formal action of the government's higher decision-making authority. NYCHA adopted GASB 102 in 2025. Based on the management assessment in the cover, no additional disclosure will be required under GASB 102. Second, GASB statement 103 address financial reporting model improvement. This statement is important because it changed the presentation in several areas, particularly MD&A, the presentation of unusual and infrequent items, and the statement of revenue, expense, and change in net position. Under the GASB statement 103, MD&A has been revised to focus on key sections, including an overview of the financial statement, financial summary, detailed analysis, significant capital asset and long-term financing activity, and current non-FAT decision or condition. The intent is to make MD&A more focused on why, balances, and result changes, instead of only presenting the amount of the changes. GASB 103 also changed the way certain significant items are depicted. In prior year, NYCHA present the late paying remediation changes as a special item. Under the GASB 103, this amount are now presented as unusual or infrequent item. We are currently awaiting the confirmation from GASB regarding whether the city subsidy related to the last should be reclassified from the subsidy and grant line item to the unusual and infrequent line item in the financial statement. When we receive the confirmation, we will make the appropriate change if necessary. For the 2025, the net paying remediation adjustment is presented at 841 million expenses credit, reflecting a decrease in the estimated future cost. We will provide detail during the discussion on the lab remediation challenges. In addition, the statement now separately presents operating loss and non-capital subsidy before other non-operating revenue and expenses. This is why the 2025 statement includes a subtotal for operating loss and non-capital subsidy. The implementation changed the presentation only. It does not change when revenue or expenses are recognized, and it did not affect NYCHA's financial position, result operation, or cash flows. Step. Statement 104 address disclosure of certain capital assets. This statement requires additional note disclosure for certain capital assets, including right to use lease assets, subscription-based information technology arrangement, and capital asset held for sale. NYCHA adopted GASB 104 in 2025. This statement did not have material impact on authority financial statement. So overall, the key message on the accounting standard is that GASB 102 and 104 did not materially affect the financial statement. Well, GASB statement 103 mainly affect the presentation and the terminology, particularly the move from the special item to unusual or infrequent item and the new subtotal for operating losses and non-capital subsidy. So if there are any question on the GASB 102, 103, and 104.
I don't know really how to phrase the question, but when we had the issue where they had changed the lead standard, that we then had to go back and redo all that testing. Now, how did that affect the reporting of the assets on this report?
It does not affect.
It did not affect.
It's just like changing the template. Right, yes.
So monies that we didn't have to spend before the change, we spend now, you're saying didn't affect the report at all?
It doesn't affect the bottom line, but it may affect how to represent it. Whether it's like the money received as subsidy or the subsidy under infrequent and unusual and infrequent category. That's why I point out that we are still waiting for the confirmation from the GASB. How do we treat the city fund that we receive related to the lead?
Okay.
Yeah, it's about $124 million.
Victor, said another way, it's really a change in terminology or geography. It's not a change in the calculation affecting the amount.
Okay.
I have a quick question. Just out of curiosity, do we have any assets held for sale or no?
Okay, under we actually reached out to the department like the IT, the general services, and the capital asset. So based on the feedback and our analysis, this is no. Yeah.
Thank you.
I will give you a markup because it's little bits and pieces of things that you may want to take into account in terms of plurals and singulars and things like that.
Mark, is your mic on? Thanks, Anthony.
I've got this scratched on various places, what I consider grammatical mistakes. They're not substantive, but I'll give them to you when you want them.
Okay, thank you.
But I do have one question though. On page 87, you talk about individual between entry age and assumed exit ages. What's the purpose of the S there?
So the page you're on.
87. Says that individual entry age and assumed exits ages. I don't quite understand what you're getting at here.
On page 87.
It's nothing serious. And
Mark, particular paragraph, they're marked on page 87 on there.
Sorry?
So we have the page 87 on the screen.
It has it on page 87.
I got other things too.
Okay, so you're saying you'll share that after the fact, Mark?
Yeah.
Okay, thank you. Noted.
There is another statement here on page 79. Holiday leave that employees are required to take on a specific day is recognized when they occur.
Look here.
I don't understand that. That's a singular and a plural.
Okay, thank you. Noted as well.
You know this. And one other question I have on the page 73. There are footnotes there, but nothing up top that relate to 1-2. There are little dots in a couple of places. but there are no ones and twos. Is there a reason for that?
Thanks, Mark. I see where you are.
Yes. Thank you.
Up to you, finance, or we'll just make a note of it.
Yeah, we
Make a note of it. Thank you, Mark.
I'll just hand you the paper, and if there are any more of
Excellent.
these singularly unimportant comments, you can have them.
Yes. Thank you, Mark.
Thank you.
I only point out too,
Thank you.
that you're in the choice of the city of New York should be capitalized for the the all the places.
Thank you.
So if there's no further question on the gas fee implementation, I would like Amita to lead the next presentation.
Thank you, Art. Good afternoon, everyone. Now we can move on to the rent collection trends. On a cash basis, the collections improved in 2025. Cash received on behalf of tenants was $989 million in 2025 compared to $969 million in 2024. That represents an increase of approximately $20 million year over year. However, on an accrual basis, tenant revenue net decreased. Tenant revenue net was $912 million in 2025 compared to $1.041 billion in 2024, a decrease of approximately $129 million. The difference between the cash collection trend and the accrual basis revenue trend is important. The financial statements reflect not only cash collected, but also management's estimate of amounts expected to be collected in the future. In 2025, tenant revenue was reduced by the higher rent collection losses and a higher allowance for doubtful accounts. The higher allowance was driven by lower anticipated recoveries from rental assistance programs compared with 2024. Continued challenges collecting aged tenant receivables and the impact of PAC conversions, which reduced the number of Section 9 public housing units generating tenant rental revenue. To put in perspective, the gross tenant accounts receivable increased from $456 million in 2024 to $471 million in 2025. At the same time, the allowance for tenant receivable increased from $326 million to $420 million. So while cash collections improved modestly, collectability of the aged tenant balances remains a challenge. It is also important to note that NYCHA continues to manage fewer public housing units year over year as developments convert through PACT. At December 31st, 2025, NYCHA provided public housing to approximately 280,000 residents in approximately 146,000 apartments across 219 public housing developments. Now let me shift to lead remediation, which continues to be one of NYCHA's most significant operational and financial areas. As we discussed last year, New York City implemented a stricter standard for identifying lead-based paint. The threshold decreased from 1.0 milligrams square centimeter to 0.5 milligrams per square centimeter. As a result, NYCHA has continued retesting apartments under this lower threshold. During 2024, NYCHA began the retesting process under 0.5 milligram standard and estimated that 46% of targeted units had positive lead findings. In 2025, as testing continued, the estimated positivity rate decreased slightly to 45%. Approximately 81% of the apartment units have been tested to date, so actual results may still vary as the testing continues. The financial impact moved in a favorable direction in 2025. Lead-based pollution remediation liability decreased from approximately $4.9 billion to approximately $3.8 billion in 2025. The decrease was driven primarily by lower estimated future costs. This included a decrease in average resident relocation days from 22 days in 2024 to 11.9 days in 2025. A decrease in the lead positivity rate from 46% to 45%. Lower estimated contractor abatement costs per unit, and the reduction of units from PAC transactions. As a result, NYCHA recorded a $841 million unusual or infrequent item expense credit in 2025. This is different from 2024, when NYCHA recorded $846 million increase in lead-based paint remediation costs. Under GASB 103, both of these items are now presented as unusual or frequent items. Although the cash outlays and work streams will occur over a 20-year term under the HUD and Southern District of New York agreements, GASB Statement 49 requires NYCHA to recognize the estimated lifetime cost when pollution remediation obligation is triggered. This is why changes in estimates have a significant impact on the annual financial statements, even though the work will be performed over many years. In summary, the 2025 lead remediation update is positive from a financial reporting perspective because estimated liabilities decrease. However, the underlying compliance and remediation work remains significant, and the costs can still vary based on testing, timing, relocation needs, contractor pricing, and other factors. I will now provide a summary of NYCHA's 2025 financial statements, highlighting key changes in revenues, expenses, subsidies, capital contributions, and overall financial position. Total operating revenues were $1.017 billion in 2025, compared to $1.085 in 2024, a decrease of approximately $68 million. This decrease was primarily driven by the reduction of tenant revenue. As noted earlier, tenant revenue net declined due to increase in rent collection losses, a higher allowance for doubtful accounts, lower anticipated rental assistance recoveries, and the effect of PAC conversions. The decrease was partially offset by a $61 million increase in other income, primarily due to higher developer fee revenue, including the amounts recognized in connection with the Williamsburg Pact LLC development. Turning to operating expenses. Total operating expenses increased by $347 million, from $5.582 billion in 2024 to $5.929 billion in 2025. The largest driver was rent for leased dwellings, which increased by $314 million. This increase reflects higher housing assistance program payments per voucher unit and the increase in number of voucher units. Maintenance and operation expenses increased by $169 million. The major driver was higher environmental costs related to asbestos abatement, mold remediation, air monitoring, lead-based paint testing, and other environmental activities across multiple developments. Utilities also increased by $79 million due to higher rates and increased consumptions. These increases were partially offset by an $84 million decrease in general and administrative expenses, primarily due to lower workers' compensation costs from favorable claim experience and related adjustments, as well as lower liability insurance costs. OPEB expense also decreased by $74 million, largely due to an increase in discount rate from 4% to 4.28%. Non-capital subsidies increased by $199 million, from $4.494 billion in 2024 to $4.693 billion in 2025. The increase was primarily driven by higher Section 8 Housing Assistance Program funding. The increased federal capital funds used for operation purposes. These increases were partially offset by a decrease in public housing subsidy and the City of New York funding. Under GASB 103, the presentation of these non-capital subsidies are now displayed separately before other non-operating revenues and expenses. After operating losses and non-capital subsidies, NYCHA reported a loss of $220 million in 2025, compared with a loss of $4 million in 2024. These subtotals help users to see how the operating loss is offset by recurring non-capital subsidies. Other non-operating revenue, net, increased slightly by $13 million from $1.336 billion in 2024 to $1.349 billion in 2025. Gain on real estate transactions increased by $61 million, primarily due to the absence of the one-time charge recorded in 2024 against a loan receivable associated with a PACT conversion transaction. Insurance recoveries also increased by $18 million, primarily due to the reimbursement related to Hurricane Ida damages. These favorable changes were partially offset by a $100 million decrease in capital contributions, primarily due to lower federal capital funding. Capital contributions totaled $1.241 billion in 2025 compared to $1.352 billion in 2024. Income before unusual or infrequent items was $1.129 billion in 2025 compared to $1.332 billion in 2024, a decrease of $203 million. After recognizing the $841 million lead remediation expense credit, NYCHA's change net position was $1.970 billion in 2025 compared with $485 million in 2024. Now moving on to the statement of net position. Total net position increased by $3.391 billion at December 31st, 2025, compared to $1.421 billion in December 31st, 2024. The decrease reflects income before unusual or infrequent items of $1.129 billion and $841 million decrease in estimated lead remediation costs. Current and other assets increased by $109 million. This is primarily due to increase in cash and cash equivalents, accounts receivable, partially offset by a decrease in investments. Cash and cash equivalents includes restricted cash, which increased by $94 million from $653 million at the beginning of the year to $747 million at the end of the year. Accounts receivable net increased by $60 million to $1.596 billion, mainly due to higher receivables from the City of New York. Capital assets net increased by $755 million from $11.228 billion in 2024 to $11.983 billion in 2025. This increase reflects continued investments in modernization and rehabilitation projects across the portfolio, including building improvements, superstorm Sandy recovery work, heating plants work, roof replacements, boiler replacements, heating system improvements, and local law 11 facade work. Current liabilities increased by $173 million to $1.913 billion, mainly due to higher accrued liabilities, current pollution remediation obligations, and other current liabilities. Non-current liabilities decreased by $1.197 billion, primarily due to a decrease in long-term pollution remediation obligation. Long-term debt also decreased by approximately $63 million, from $580 million to $517 million, reflecting scheduled payments and amortization. So at this time, I would like to turn it to Audit for the closing remarks.
Yeah, in summary of the NYCHA main financial statement. 2025, in summary of 2025 NYCHA financial statement, this year was kind of a mixed but important financial results. Cash collection from tenant improved slightly, but tenant revenue declined on a full basis due to high estimated collection losses and the ongoing challenge of aged tenant receivable. Operating expense increased, driven primarily by the higher Section 8 lease borrowing cost, environmental activity, and utility. Non-capital subsidy increased, especially from Section 8 housing assistance program funding and federal capital fund used for operations. That mediation estimate moved favorable in 2025, resulting in an $841 million expense credit and a reduction in the net payment. Tuition remediation liability fund approximately $4.9 billion to $3.8. Capital investment remains strong, with capital asset net increasing to nearly $12 billion. Net position increased significantly to $3.4 billion. However, NYCHA continued to face significant operating, capital, environmental, and federal funding challenges. We will continue to monitor this financial trend, manage tenant receivable, and reflect this consideration in our financial planning. Thank you. We welcome any question or comment you may have for the NYCHA main financial statement presentation.
Thank you, Ayanamita. Any questions from the committee members, questions or comments?
I do not have none.
Okay, great.
Anything?
No.
Excellent, thank you. Finance, anything further on draft consolidated LLC 1 or trust before proceeding?
Yes.
Okay, please continue.
We can move on to the financial statements for NYCHA Public Housing Preservation 1, LLC 1, the draft annual report. The statement of revenues and expenses and changes in net position. For 2025, operating revenues totaled approximately $74.2 million compared to $94.9 million in 2024, a decrease of approximately $20.7 million. The decrease is primarily due to lower tenant revenue, driven by higher rent collection losses, continued challenges in collecting aged tenant receivables, and the impact of PAC conversions, which reduced the number of units available for rent. Operating expenses decreased from approximately $215.7 million in 2024 to $196.6 million.
Excuse me, where are you reading from so I can follow you?
The financial statements for LLC 1.
So it's tab 4 and they're on page 9, that's it? Tab 4 in here.
Thank you.
Tab 4.
Tab 4, page 9.
Thank you.
I think
Thank you, Mark and John.
Operating expenses decreased from approximately $215.7 million in 2024 to $196.6 million in 2025, a decrease of approximately $19.1 million. The decrease was primarily driven by a reduction in maintenance and operation expenses, lower general and administrative expenses, lower protective service costs, and a slight decrease in depreciation expense. Despite the decrease in expenses, LLC 1 reported an operating loss of approximately $122.4 million in 2025, compared with an operating loss of approximately $120.8 million in 2024. Non-capital subsidies decreased from approximately $162 million in 2024 to and $35.4 million in 2025, primarily due to a decline in HUD PHA operating grants. Non-operating revenues and expenses net decreased from approximately $128.4 million in 2024 to $46 million in 2025. This decrease was primarily due to a decrease in the gain on forgiveness of debt from approximately $151.9 million in 2024 to $72 million in 2025. An increase in loss on transfer of assets to NYCHA from approximately $37.6 million in 2024 to $65.5 million in 2025. These items relate to NYCHA's PAC strategy, where developments are converted to public housing funding to Section 8 from project-based vouchers to support rehabilitation through private development partnerships. In 2025, LLC-1 reported unusual or infrequent item credit of approximately $109.8 million related to lead-based paint pollution remediation. This credit reflects a reduction in estimated future remediation and abatement costs. The decrease is primarily attributable to lower estimated tenant relocation costs, a reduction in the lead positivity rate from 46% in 2024 to 45% in 2025, and lower estimated contractor abatement costs per unit. The implementation of GASB Statement Number 103 affected the presentation of this item by requiring the unusual or infrequent items to be presented separately before the change in net position. This was a presentation change and did not change the underlying recognition or measurement of the cost. Turning to the statement of net position. Total assets decreased from approximately $378.1 million in 2024 to $358.5 million in 2025, a decrease of approximately $19.6 million. Current assets increased by approximately $17.6 million, mainly due to an increase in cash and cash equivalents of approximately $10.4 million. An increase in the amounts due from NYCHA of approximately $14.6 million, partially offset by a decrease in accounts receivable net. Capital assets net decreased by approximately $37.2 million, from $327.8 million in 2024 to $290.6 million in 2025. This decrease was mainly due to depreciation expense and the transfer of Bayview development assets to NYCHA under the PAC initiative, partially offset by current year capital additions. Total liabilities decreased from approximately $1.108 billion in 2024 to $919.5 million in 2025, a decrease of approximately $188.4 million. The decrease was primarily related to a reduction in notes and loans payable to NYCHA, mainly due to the forgiveness of debt associated with Bayview development. A reduction in pollution remediation obligations, reflecting lower estimated future lead-based paint remediation and abatement costs. In summary, LLC-1's financial position improved in 2025, with net position increasing by approximately $168.8 million. The improvement was primarily driven by the reduction in estimated lead-based paint remediation obligations, along with the financial impacts of PAC-related transactions, including the transfer of assets to NYCHA and the forgiveness of related debt. At the same time, LLC-1 continues to experience operating losses, lower tenant revenue, and reduced non-capital subsidies. Management will continue to monitor tenant rent collections, subsidy levels, capital asset activity, lead-based paint remediation estimates, and the financial impact of ongoing PAC conversions. This concludes my presentation of the LLC-1 draft AFR for 2025, and I'll be happy to answer any questions.
So all these programs that they are coming up with now lately, that they're saying that they have all this success with helping tenants be able to pay their rent, and we're still at a loss? When it comes to rent collection. If they're getting these monies from these other agencies or whatever designation you wanna give these entities that are giving these residents the money, then how is it that we're still going backwards, I guess? Or did I miss the numbers?
Actually, in 2025, compared to the previous year, we don't get some of the federal assistance program, like I think there's some like state subsidy we didn't get in 2025.
Right, they have, I mean, there was various programs.
Yeah, but
At the board meeting, I mean, I hear the CEO, oh, we had success with this and we had success with that, and it was a breakthrough, so I'm just trying to understand the numbers a little bit. That's all I'm asking.
maybe can I ask Georgie to address this?
I think what happened, I think we can.
Yeah.
I think the previous years, what helped us was the ERAP, all the assistance that we got from the states on that, and we didn't have that much in 2025 going forward. So that's the difference.
So you're saying that those will be in the next report, or?
No, it would not be the next report, it was just a one-time deal that we got that helped us with the rent, because we used it to pay the tenant's account.
Right,
We don't have that going forward.
okay, so I understand. So you have ERAP, you have one-shot deals, you have an array of things where we're getting these monies, but you're saying it's a one-shot deal and that's it. It's no longer coming
That's
as a
right.
stream.
That's right.
So then who do I have to speak to about the follow-up on that?
We can connect on that separately,
Okay.
let me know what the follow-up
Okay.
questions are, and we'll plug into them as always.
Okay, you understand my question though, right?
I wanna make sure that I do, but. do you
We'll
wanna
do it,
clarify?
okay. Alright, okay, alright, thank you.
But yes, at a high level, yes.
I have a couple of questions. I'm not sure how to find them for you, but there is a statement here, and capital delivery services. What are capital delivery services?
So what page?
It's on page 2 of the Preservation Trust. It says here, and payroll and capital delivery services. And I don't have any idea what that is. You see it?
No, I'm not able to see it on page.
The trust financial.
Is this LCC?
It's on the New York City Housing, Public Housing Preservation
Preservation
Trust.
Trust.
Oh, trust, okay, the trust.
On page 2.
And finance, feel free to, as needed, if there's anything that's trust specific that is more
Okay.
appropriate, for a different
Presentation.
forum,
Okay,
please just, clarify and say so.
okay. So there's trust presentation. Yeah, I think, the question is for the trust. Yeah, you're gonna start the trust.
While you're on that page, I have another question.
Let's do. I just wanna be able to take question one question at a time if possible, so make sure they're all addressed.
What paragraph?
Second paragraph,
Second paragraph towards the end.
third line from the bottom of the second paragraph. Says assistance and payroll and capital delivery services.
We would need to get back to you on this because this is part of the transmittal letter for the trust that we follow up.
I just
on
don't know
what
what
the
it is.
specific, yeah, what it means, okay, we'll follow up on that.
And then there is something here to focus on pre-development activities
Okay.
at these various places. What would that entail?
Okay. Okay, we'll follow up.
The same thing, it says it in the next couple of paragraphs.
Okay,
More accurate validation of site conditions.
okay, I see that.
I don't know what that means.
Okay.
Thank you, Mark. Other questions or comments?
I mean,
As
I
long as
guess-
you're on that paragraph or that thing, just let me point out, if you go to page 13, you're missing the end of a sentence. Says these gains were offset by 10 odd number of operating expenses during period. Gotta fix that one up. And then I have a business question.
Correct, see that, thank you.
It shows that the contract for professional services went from $1.6 million to $6.4 million. That's a huge difference. Is there a reason for it?
Yeah, based on the financial statement analysis, the information we have is this increase is primarily due to the consulting and the contractual service cost related to the program implementation and the modernization initiative. Because I think this is related to the Nostrum, Unity Tower.
I'm not-
Yeah, I could just add what I read is that as developments move into the pipeline for the
Yes.
trust, Unity Towers and Nostrum, the trust needs to spend quite a bit of, money on these contracts for engineering, elevator work, things that are like necessary right away in order to get ready for the financing. So there's some notes in there about that, because
Okay,
that's what I did read that.
I couldn't tie them together.
So what you're saying is the trust has not been developed yet?
Yeah, the assets are, the developments are haven't closed yet on the new financing, but the trust is undertaking all kinds of work scoping, what the work is, doing some of the work ahead of time, such as, important things like elevator and there was something else.
I'll follow up.
Listen, instead of giving you the typos, I'll just give you this thing and you
Okay.
can,
Yes.
you can look at the capital Ts and other things.
Thank you, Mark. Finance, that's it for you? Or anything further? And then, before I turn it over to Dwight, I wanna make sure.
Actually, we can do a kind of like brief presentation on the statement of revenue, expense and change.
Great, thank you.
What are we on now, please?
The trust financial statement.
Thank you. The Preservation Trust.
Yeah.
Thank you.
So the trust did not report operating revenue in 2025, and it remained in the startup and the pre-development phases. Operating expenses increased from approximately $3.6 million in 2024 to $10.1 million in 2025. The major expense category were professional service contract, approximately $6.5 million, salary and related benefit of approximately $2.5 million. Search service fee to NYCHA of approximately $1 million. The increase in professional service contract was primarily due to the consulting and the contractual service costs related to program implementation and modernization initiatives that I still mentioning. Salary and related benefit increase due to the additional headcount as the trust continue building its organization. The search service fee to NYCHA increased due to administrative support provided by NYCHA and personal service costs related to NYCHA capital project support for trust modernization efforts. After recognizing about approximately $11.5 million in subsidy and grant, approximately $52,000 in investment income, $4.1 million in capital contribution, the trust report a total increase in net position approximately $5.5 million for 2025. Turning to the statement of net position, the total assets increased from approximately $1.4 million in 2024 to $6 million in 2025. The increase was mainly due to cash increase to approximately $2 million, construction in progress increased to approximately $4.1 million. The construction in progress balance related to the pre-development activity, including elevator renovation work for No Strong houses and Brown River addition houses. Total liability decreased from approximately $5.8 million in 2024 to $4.9 million in 2025. The decrease was primarily due to a reduction in the amount due to NYCHA. At December 31st, 2025, the trust owed NYCHA approximately $2.9 million compared with approximately $4.7 at December 31st, 2024. The trust also report compensated absence of $294,000 and OPEC liability of $370,000 at year end. Overall, the trust end 2025 with a total net position of approximately $1.2 million, consisting of approximately $4.1 million net investment in capital asset, offset by an unrestricted deficit of approximately $2.9 million. In summary, 2025, it was an important year for the trust. The trust continued to build operational and capacity, advanced pre-development activity for its initial pipeline project, and recognized its first significant grant revenue and capital contribution. This concludes my presentation of the NYCHA Public Housing Preservation Trust for 2025. Thank you.
Thank you, Ayat.
I did not understand this, what capital delivery services are.
Let's talk into this.
It's on page 2.
I'm talking to this.
Excuse me, I didn't understand the concept of capital delivery services. What is meant by that?
We'll follow up and provide,
I was just gonna say.
details.
And then there's, in the same page, there's something equitable risk allocation and more accurate validation of site conditions. Is it a validation or just the dollars?
Thank you. We'll follow up on that as well,
Yeah.
unless you have any other questions that are able to be answered at the moment.
Ms. Brenda, remind me that I have to give you some questions. I don't know if it's for this committee, but it has to do with the trust. And the question would be, if the trust is working, why doesn't sound like it's working? Okay?
Thank you,
And then
Vice
we'll
Chair.
talk about
Noted,
that.
if any.
But I want to go on record that I really didn't understand a lot of that. I understand PACT. I understand all the other programs that are running around. But the trust, although it already has a board, it's been established on many other levels, it doesn't seem to be generating what I guess was expected of it to generate. Okay?
Noted, and certainly the trust has been
Alright.
scaling up. Unless anyone wants to speak to that further now, that is most appropriate
Okay.
for
Okay.
a follow-up
That's the question.
and hasn't.
I don't wanna burden you, but you do have a few typos here, I'll give you this.
Thank you, Mark. Okay, thank you again, finance team, so we can now move to our next agenda item number 6. So,
that me,
that's a
Benjamin?
presentation, of Deloitte's Audit Committee letter and management representation letter for the 2025 audit. I invite Alan Truesdale, Elvin Pearson, and Tony Lim of Deloitte to present. Thank you.
Benjamin, thank you. It's Alan Truesdale with Deloitte. I'm an audit partner with Deloitte signing the financial opinions this year. Want my team to just briefly introduce themselves if they could before we go through our required communications.
Good afternoon, everyone. My name is Elvin Pearson. I'm a senior with Deloitte & Touche LLP.
Could you be
and this
louder?
is- yes, I can be. Good afternoon, everyone. My name is Elvin Pearson. I'm a senior with Deloitte & Touche LLP, and this is my 4th year serving on the NYCHA engagement. My 2nd year as the lead senior.
Good afternoon, everyone. My name is Tony Lim. I serve as the manager for the NYCHA engagement team, and this is my 3rd year on this engagement. Thank you.
This is my first year. As you know, we were making jokes before the meeting around my introducing myself as Jill, as many of you know, but this year I am Alan and sorry, I'll get closer to the mic. Anyway, no more jokes aside, I did want to have my team introduce themselves and give credit where credit is due, because the individuals to my right do a lot of the work, and very thankful for their professional and personal sacrifice to get us to where we are today. And that is in tabs 6 and 7 in your books, and that's the materials that we're going to cover. So again, the purpose of our comments today are to go through the audit results of the 2025 external financial audits. And again, the scope is unchanged in comparison to previous year when we're looking at NYCHA, Maine, LLC1, and the trust. I do agree, Ayat, with both your and Amita's comments. That is a best practice in front of audit committees, and so just really wanted to applaud your effort and diligence in detail going through all 3 of the entities. I think that was very much welcomed, and agree with the high level analytics, so thank you. I do want to, before we have Tony and Elvin go through some of the required communications, I do want to say thank you to both my team as well as the NYCHA team. As we sit here today, we are near completion with this year's audit. We are working through a shorter list of comments on the financial statement drafts, but we are on track on time to issue the opinion on the financials before the board meeting. And similar to previous years, we anticipate issuing unmodified or clean opinions on those 3 entities. I could sit here and talk for 20 minutes. I don't want to steal Tony and Elvin's thunder, but at a very high level, I will tell you no major surprises or disagreements with management in executing this year's audit. And as we look forward to the completion of the compliance or single audit, that typically happens in September every year. That's when this will all finally wrap up. We'll issue our opinions on the single audit, as well as any comments that we might have for improvement, i.e. control observations or control deficiencies. So I guess without further ado, Tony and Elvin, if you want to walk us through some of the comments on tabs 6 and 7 of our governance communications, that would be
Listen,
great.
before you do that, I wanna raise one of my pet peeves,
Yes.
which is that you only use it for management and others and not others. This is a public document, and it's intended to be that way. And yet what you have here is one paragraph that denies us that right.
Oh, so we are issuing our results of our audit to those who engage us, which is the audit committee and management, but vis-a-vis this public forum, these are open comments.
No, but it says solely for this report, that's the audit. Solely for the information use of management.
Sorry, can you scroll down on the screen, please?
This report is intended solely for the information and use of management.
Page, I think we're
The
on.
audit and finance committees, not intended by anybody else. That's unacceptable.
The final paragraph.
But the final paragraph on this.
I know this from the New York City audit, every once in a while, one of your competitors always puts this language in, and they get out very fast when they're told you put that in, you're not the auditors.
So Mark, maybe I'll answer hopefully your question. So our opinion over the financial statements is what is uploaded obviously to the Federal Audit Clearinghouse and what is attached to your publicly issued financial statements. The letter that we communicate to management is part of the AICPA auditing standards, where we provide you a summary of specific required communications related to the audit. And those letters are issued directly to management and those who engage us, which is you, the Audit and Finance Committee, but those are not issued to the broader public like an opinion would be.
Said another way, we're not restricting, this information is public vis-a-vis
Well,
our,
I don't understand why you need that one paragraph.
that paragraph is pertaining just to this letter for this conversation, but the information ultimately gets uploaded to the Federal Clearinghouse for public consumption.
And it won't be on that.
I tell you, I have had this with the city auditors and everybody else, and by the time we get done, it disappears.
Okay.
This is, everything in this should be a public document.
Understood, thank you, Mark. And Lloyd's point, if I understand at least part of it correctly, is that under standard AICPA and generally accepted accounting standards and other guidance, that at this draft stage, this is customary
Correct.
at this draft report stage. So I think we're all on the same page, Mark. Thank you. Lloyd, back to you.
Okay, so let's go through our required communications. Again, those are going to be consistent with what the committee has seen in previous years by design and in accordance with our standards.
Thank you, Alan.
You wanna keep that in here, but you want them to get rid of this.
They get rid of it when you send it over, which is what you're saying.
So our communication, audit committee communication letter states our responsibility under the auditing standards in the next page, and also in ethical requirements
I don't
that
see
we need
that
to
in
follow,
our audits.
and also significant accounting policies.
When I sit on the city audit committee.
This year, the authority's significant accounting policies are set forth in Note 1 to the authority's 2025 financial statements. During the year ended December 31, 2025, NYCHA adopted GASB statement number 102 and GASB number 103 and GASB number 104. We are not aware of any other significant changes in previously adopted accounting policies and their application during the year ended December 31, 2025. And also, for the accounting estimates, could you please take a look at Appendix A at the end of this letter? Yes. So, management's pension estimates for the New York City Housing Authority were developed using actuarial assumptions that are updated on a regular basis and supported by the third-party specialists. The key NYCHA's assumptions did not change from the last year. Also refer to the table below for the detailed amount. And please go to the next page. For other post-employment benefit estimates for New York City Housing Authority and also for the New York City Public Housing Preservation Trust were also developed using actuarial assumptions that are updated regularly and supported by a third-party actuary. Please go to the next page. And lastly, New York City Housing Authority is self-insured for workers' compensation and general casualty claims. Self-insurance reserves are estimated based on loss information obtained from third-party administrator with consideration given to historical and industry claim development experience. So we performed our audit procedures over pension, OPEB liabilities related expense and workers' compensations and general casualty claims. We evaluated management's method and assumptions with our actuarial specialists, testing the accuracy and completeness of underlying data, and obtaining evidence supporting the key assumptions. We also tested the design and implementation of the relevant controls. Based on the procedures performed, the amount reported related to those financial statement line items above appear reasonable in the context of the financial statements taken as a whole. We can go back to the letter.
Page up about
Page
4
two.
pages.
Okay. Hello. Team.
Thank you, Tony. And then to provide a summary of the remaining results of our audit, we're pleased to report that there are no material audit adjustments to report to the committee. There is a current year audit adjustment for LLC1 that also applies to the prior year that was discovered in the current year, but it is not considered material for purposes of our audit procedures. There will be an associated control deficiency on which we have yet to conclude on the severity. Consistent with prior years, that will be communicated during the September Audit and Finance Committee meeting alongside the presentation of the single audit. Additionally, we note that there were no disagreements with management during the current year. We are not aware of any consultations with other accountants by management, and there were no significant difficulties encountered in performing our procedures.
So that concludes our required communications from under our professional standards. We're happy to take any other further questions, Mark or Victor or Joan, from you.
I just give you a couple of typos.
Okay. And we can have a conversation about your other comment as well.
Thank you. Deloitte, thank you very much.
Thank you.
Thanks everyone, Finance and Deloitte, for those presentations. So at this time, I request a motion for the committee to recommend approval to the board of the financial statements for 2025.
With all the corrections, yes. So moved.
Thank you, Victor. Moved with corrections noted and reflected. Do we have a second?
Second.
Me too.
All in favor?
Aye.
Aye.
None opposed? And no abstentions? Thank you. So moved, that's been carried. Okay. I now turn, so back to Deloitte. Briefly, just for whether there is any further discussion on the draft audit committee letter and draft management rep letter for the preservation trust and management rep letter, or
No, Benjamin, my understanding is there are 2 documents because there are 2 different governing boards, but our collective comments covered all 3 entities as well.
excellent, that's exactly what I was
Absolutely.
getting at, thank you very much. Okay, excellent, thank you. All right, that being said, we can now please turn to our next final agenda item for this afternoon. Representatives from RSM US LLP will present an internal audit plan update, as well as executive summaries of 3 recently completed internal audits or assessments, the overtime analysis and testing audit, vendor payments, audit, and first and second lines assessment. It's my pleasure to turn the floor over to Jennifer Murtha and Megan Brower for that presentation.
Am I assuming that that was not sent earlier? The material was not sent earlier.
Thank you. You have you received those materials electronically and via mail, and they're also on the screen. RSM, over to you.
This is the one we did get Friday.
Thank you very much. You all ready? Round two, thanks for warming us up, really appreciate that.
Our pleasure.
So with me today is Megan, part of our core team. Missing is Clara Ewing and Liz Watts. You may be used to seeing them. They both are dealing with illnesses. I'm sure they're watching. So Megan and I will do our best to represent and answer all of your questions. To address Mr. Kaplan's question about the watermark. We have a watermark on our reports as well. Not intended for distribution. Understanding that these reports can be distributed, that they are public reports. We like to watermark these reports when they come to you all. After any questions, changes, commentary, commas, apostrophes are included, we will take that watermark off when they go to the board. So just to clarify. We've provided you with an internal audit update, those reports that are complete and those that are in progress for your records, but we'd like to move into the overtime analysis and testing. First, wanna thank, as Deloitte did, the team at NYCHA as well as my team. These are our first reports that we're issuing as your internal auditors, and it was very important to us to do it in a way that was respectful, to build relationships as well as to build trust. To have an effective internal audit partnership, we must be collaborative, and I assure you that we, along with the NYCHA team, had a lot of great valuable conversation. The purpose of internal audit is to identify risk and look at the internal controls around those risks. Collaborate, because we are not gonna sit here and tell you to spend $100 million on new systems and processes, but to really collaborate to understand mitigating controls that can be done effectively and efficiently. Overtime, it's important to reiterate that NYCHA has over 500,000 residents, 180,000 units, several fragmented systems that create challenges, multiple programs with highly complex federal, state, and local environments. As you all know, but I think it's important to point out as we move into overtime. If you'd all like to move to page 2 in the background section. And again, as you all know, but I think it's worth repeating, NYCHA relies on a large workforce to deliver essential services, maintenance, repairs, emergency responses. They employ numerous skills trade workers, deal with safety needs. So overtime is a routine component of NYCHA's processes. The overtime process involves multiple departments, including HR, payroll, IT, quality assurance, and each of the bureaus and applicable operational departments. For the internal audit, we evaluated 342 million in NYCHA overtime costs incurred during the period, starting January 1st for about 18 months. We tested 30 transactions. The audit focused on controls over overtime requests, approval, employee timekeeping in Kronos, and monitoring, with an emphasis on the risks related to unauthorized overtime, inaccurate time reporting, excessive overtime utilization, and segregation of duties. We did analyze a lot of data. We were, dare I say, a gnat in the ear of a lot of the folks here trying to really understand what they have to go through with their manual systems to do reconciliations. And as most auditors do, we used sampling to gain an understanding of the processes. Transactional level testing focused on overtime requests, approval, employee timekeeping in Kronos. It did not include the employee swipe in, swipe out processes. During this audit, we identified 2 high and 2 moderate observations. And because of these initial results, we will be looking at overtime on a regular basis, drilling down into some of the higher risk departments to provide continuous assurance that controls are working effectively. I'm gonna turn it over to Meg to go over issue number 1, overtime approval and documented controls.
Thanks, Jen. This observation relates to how overtime is approved and documented across NYCHA. Section 51 of the Human Resources Manual requires that overtime be approved in advance by the appropriate supervisor. That approval documentation evidence authorization and that approved hours reconcile. Our testing focused on whether those existing requirements were consistently applied. We noted that there were some incomplete or missing approval documentation, approvals not granted in advance, unsupported overtime, recorded hours exceeding approved hours, and some location mismatches. This increases the risk that unauthorized, unsupported, or inaccurate overtime is processed without detection.
So issue number 2 is also high risk and leads to the reason why we feel that internal audit should be looking at overtime on a consistent basis, on a cycle audit basis. Issue number 2 has to do with the fragmented systems that are not integrated. So because of that, it's a very clunky and manual process to monitor overtime. Thus, it reduces the reliability of the data used for monitoring. And we will talk about this also in the vendor report. Issue number 3, Meg?
Issue number 3 speaks to some of the governance and policies and procedures that are going over overtime. So while there are policies and procedures in place, they don't necessarily take into account all the unique situations that can occur at NYCHA, such as emergencies and items like that are irregular. So we noted that overtime processes do not consistently address some of those post hoc approvals that may be required, documentation requirements, or retention expectations, and that practices really vary across boroughs and departments. This can increase the risk of inconsistent application of controls and unauthorized or unsupported overtime.
And lastly, issue number 4 is moderate, please.
I just have and this is only for my edification, only, just me, no one else, just me. The word governance gets thrown around a lot. I need to know what your definition of your governance that you just mentioned means.
Sure. So when we're talking about governments, we're talking about like an overarching or framework or policy or procedure that's gonna help govern or really dictate what should be followed here at NYCHA. So we're talking about something that's a higher level, maybe more enterprise-wide.
And these are certain things that must be done in the order that it is supposedly, the way it was put together.
Correct, it's more like you can use like framework as another word.
Okay.
Which we
I
will,
just wanna be
which we
clear.
will use in the future, because it does get tossed around a lot, quite a bit,
That's fair.
governance.
Okay.
So that usually comes from the top on how we want things to be done that need to be followed throughout the organization. Right now, some of the challenges without that is everybody kind of does their own thing. Not to say that it's bad, it's just not consistent in conformance with an overall arching, this is how we do it at NYCHA.
Which is why I asked the question, the governance. Now that I know your definition of it, now we can proceed. Thanks.
And it's actually a perfect segue to number 4.
Okay.
So the payroll department function, they do spot checks, and those spot checks are performed before each pay period. Again, thinking about the magnitude of the level of employees and overtime, as we mentioned, the dollars. Payroll processes 500 to 600 changes each pay period. And a lot of that is stemmed from the inconsistent nature of how the different departments and bureaus process and interpret the policies and procedures around overtime governance. So we talked a lot about that, a lot of valuable conversations and collaborations on understanding the root cause. So if 1, 2, and 3 are addressed, 4 should fall into place. So there was an incredible amount of work done related to this report. And again, we thank the team at NYCHA for hanging in there with us and going through and having those great conversations to come up with the recommended action that they will take to, again, mitigate the risk that overtime is not accurate. Okay, with that, I can move into vendor payments. Similarly, tremendous amount of volume as it relates to vendor payments. If you turn to page 2, first paragraph, NYCHA processes a high volume of vendor payments to support operations, as you can imagine, maintenance, repairs, utilities. For the purpose of this audit, the vendor payment lifecycle includes invoice receipt and intake, invoice processing and validation, authorization and approval, and payment execution. So for the internal audit, RSM evaluated a sample of 55 invoices totaling $282.9 million, drawn from a population of 259,000 invoices, which totaled over $4 billion. And again, that's the same 18 months starting January 1, 2024. The active vendor population consists of 5,500 vendors, from which we took that sample of 20 vendors for additional review and examination. Again, remembering that the internal audit focuses on process to mitigate risk. We reviewed audit data and system limitations that required us to manually reconcile records, very consistent with overtime. The folks here have fragmented systems, so some of that monitoring gets very clunky. This audit also identified 2 high-risk items and 2 moderate. Again, if you turn to page 3, we used sample testing and we did not identify any incorrect or erroneous vendor payments attributable to the observations in this report. However, data limitations identified during the internal audit reduce our ability to rely on the system data for population level analysis and limits NYCHA's ability to perform comprehensive monitoring. I'm going to turn it over to Meg to go through issue or observation number 1 that has to do with user access.
So our first observation is around, we did use governance again, the user access, governance, and segregation of duties. So this finding is again specific to vendor payments. We did not do an overarching user access review across all of NYCHA, but we did note that there was not a periodic user access review performed over Oracle as it came to vendor payments. And access provisioning relies on mirrored user profiles without a preventative review to evaluate segregation of duties implications. This increases the risk that inappropriate or incompatible access combinations persist and can go undetected, which can create the potential for unauthorized or inappropriate transactions to occur without independent oversight. One important item to add here is that our testing did not identify instances of incompatible activities performed by the same individual. But that access level conflict does exist and remains unmitigated.
So it does open us up into possible issues.
Correct.
So moving to observation number 2, also a high risk, very similar to overtime, the vendor payment system data governance. And again, as we move to a more data-driven society, this becomes increasingly important. The process to monitor is very labor intensive, and a move to systematic monitoring for more efficient and effective monitoring is a lot of the discussion that we had. How to be less manual, which we all know manual processes increase the risk of just errors and irregularities. And so moving to a more supported, data-driven monitoring process is where we're going to in observation number 2. I'm gonna let Meg talk about the 2 moderate issues, 3 and 4.
Thanks, Jen. Our next is over the validation and oversight of vendor master data changes. So we did note through our testing that there were some inconsistencies in how the vendor master data flowed through. Now, one item to note as well is that both procurement and AP need to be able to have different fields visible to them within the vendor master file, so that is an important item here. But that we noted that vendor master data changes were processed and without consistently applied validation of key vendor attributes and without independent review across all change types. We do wanna clarify that NYCHA does continue to perform callback verification and independent review over banking changes, which is the most elevated risk in this area. This increases the risk that inaccurate or unauthorized changes to vendor information may not be detected prior to processing. The third one is over the standardization of vendor payment control execution. So this is just stating that it's given how manual the process is, there could be different people involved in the execution of payments going from, A to B, and that they may be looking at different things. So we're recommending and looking to basically standardize that process a bit more, to take out some of that manual, variability that can occur, and to make sure that, no matter who the reviewer is, we're all evaluating for the same items.
Have you taken into consideration the vendor name check? I mean, does that help in any of this?
You mean like for a duplicate vendor check?
Right, the vendor name check.
Yes, so we did test, through our data analytics, we identified some potential duplicate vendors, and we were able to work with the team to validate that those were not true duplicates within the system.
And just in case you may be referring to, Vice Chair, to the more comprehensive standard vendor name check process, which is also related to the procurement process. We evaluate that as well. That won't be evaluated exclusively. It's not exclusively as part of this audit. There are other audits that will touch on that as well, just in case that's what you were referring to.
Right, no, and I understand that, but being that they're giving the report and it's dealing with the vendors and how there's a possibility of something possibly could go wrong, then that should be something that should be considered within the realm of this particular issue.
Yes, agreed, and it is, thank you.
And to that point, we see across the country, and I'm sure Deloitte's dealt with it as well, our municipalities, as they go through the modernization of their systems, our large complex governments in particular, these are things that we see all the time. It is not unusual. NYCHA is not alone in some of these challenges. And like I said, the team was very collaborative at NYCHA to brainstorm how to mitigate these risks. So last but not least, I see Cassie here. The first and second line report is an assessment. So NYCHA is a very large organization with many moving parts, and there are numerous risks, some of which we just went over. Addressing these risks requires strong coordination between the frontline operations and oversight functions. So if you go to page 2, we talk about first, second, and third lines of defense. There is a tremendous amount of auditing, I use that term loosely, and checking and reconciliations and monitoring being done throughout the NYCHA organization. What this report addresses is a governance or a framework to sew together the seams to understand what all is happening, first line, second line, and third line. So first line is operational management. Business units responsible, and again, this is on page 2. Business units responsible for delivering services and managing risks through day-to-day activities, including implementing controls and adhering to policies. When we refer to second line, again as defined by the Institute of Internal Auditors, this is risk and oversight functions that establish policies, provide guidance, and monitor risk and compliance activities performed by the first line. Third line is what you see here at the table. It's the internal audit and in some capacities the external audit function. So this assessment builds on NYCHA's prior fraud risk assessment by evaluating how responsibilities are defined and executed across the first and second lines of defense. Basically, the collaboration of efforts to coordinate all of the internal controls through first, second, and third line of defense. We did identify 2 high risk and 1 moderate risk, but if you turn to page 3, the very fancy graph, risk and compliance maturity, we have assessed NYCHA as early managed, but again, go through the implemented or coordinated across the enterprise that sits with several different departments. So we have provided this framework to kind of pull all of that together so that is centralized and sits under one roof, so we can really identify the true gaps of where things need to be drilled down and assessed. Again, this is an assessment, like a blueprint for NYCHA to build this framework to coordinate all of the different things that are going on throughout the organization. So at this point, Meg and I will take any questions that you may have regarding the 4 documents that were discussed.
That works for me. I asked the questions that I needed to ask. That's fine.
Oh, I guess I have a question on the graph. So ideally, are you saying like you would wanna move the first and second line towards, quantitatively managed and optimizing? Like now they're just over here?
Correct, so things need to move to the right.
Yeah.
And obviously, there's a cost benefit analysis of moving all the way over to the right. We currently do not have any clients that sit there.
Yeah.
But it would be nice to be closer to the yellow and even have a goal of being in the green. And again, we can't conclude that NYCHA isn't there.
Yeah.
Pulling together all the different components will be an exercise to go through to maybe move that black line over closer to the green.
Thanks.
And I think one thing to call out too is that there are a lot of functions that are currently working at NYCHA. This report's really focused on how can we coordinate all of these efforts so that way we have one holistic view instead of all of these segmented or fragmented views. So that's really how this is calling together, because it's still giving credit to all the different monitoring and compliance, all these functions that exist, QA, all these great functions that exist at NYCHA, but it's how can we make it cohesive so that way you have one bird's eye view from a compliance perspective versus needing to go to, several different fragmented teams.
Makes sense.
Hence it doesn't look so fragmented, right?
How has the reaction been to what you've done?
With the process owners?
It's been great to be.
You're talking about people's livelihoods here.
That's right, that's
And,
right. Good point.
I got the impression, because I'm a total outsider, that it's been sloppily done. And whenever you try to tighten those screws, you tend to have a bounce back from the people on the line.
We've had incredible series of exit conferences to go over what we mean, right? So again, we're not gonna sit here and tell you to invest in $100 million new system, which would, really help mitigate a lot of the manual processes that we saw, but to really challenge ourselves and collaborate with what can be done to mitigate, but not create so much excessive work. I mean, the team here at NYCHA, most are wearing many hats, and we have a high level of respect for that. So as I mentioned when we first started, these first couple of internal audit reports that are being issued are very important because word spreads. Are we easy to work with? Are we fair? Are we reasonable? Do we know what we're doing? So going through and going through that exercise and having those conversations was incredibly important. And I think the folks at NYCHA were open to it. They want it to go from, they want it to be better. They want, the collaboration, and nobody wants anything to happen from a risk standpoint, right? We want to stay out of the paper as often as possible.
Thank you.
If I may, I visit a lot of the developments on my own, because I used to be a tenant association president, so I would go to other developments to kind of see what's going on in my fellow residents. And doing something that's new although they may not agree with it at the moment, is better than not doing anything at all. And so, looking at it in that aspect, yes, a lot of them are agreeing with some of the stuff that is going on and that NYCHA is trying to implement, not only from the internal aspect, from what you see on the outside, but it's gonna take some time. It's a lot of work. It's a monumental task, but I guess we're confronting it. And to everyone involved, thank you for that, as a resident.
I just wanted to briefly add, Mark, in response to that, before we move to closing. So the internal audit and assessment team is directly overseeing and involved with the internal audit work being done by RSM. And for whatever it is worth, I have never personally in my career seen this amount of careful attention, thoughtfulness put into both on the auditor side, audit planning side, auditee side. It's just been a tremendously collaborative, well thought out, NYCHA board approved approach that RSM has been executing tremendously, and just the thoughtfulness from all of the stakeholders, from test planning and fieldwork and testing to next steps and remediation, really is the most coordinated and thoughtful I've seen in my career. So wanted to add that for whatever that is worth. So
It's good to hear.
yeah. Okay, with that said, are there any final questions or comments? Hearing none at the moment. That does conclude our business for today, our scheduled business. So for planning purposes, before we adjourn, just for planning purposes, our next Audit and Finance Committee meeting is scheduled for Thursday, September 3rd, 2026 at 10 a.m. Do I have a motion to adjourn this afternoon's meeting?
So moved.
All in favor? Do we have a second?
Second.
All in favor?
Aye.
None opposed and no abstentions? Thank you. For the record, the time is now 3:43 p.m. and today's Audit and Finance Committee meeting is hereby adjourned. Thank you all.